Morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, September 17th. Well, out of the box last night, we had pretty much a generally firm tone across the board except for the soybean oil, and those gains pretty much held their positiveness throughout most of the night. Pretty much awaiting what came out at 5 o'clock, and that being the FSA, Farm Service Agency's updated prevent planted acreage numbers, which came out on a supportive tone and further rallied the markets in the overnight trade to us currently being up in the neighborhood of around 6-7 cents in the wheat market, up roughly a dime in the corn, 15 cents in the soybeans, $5 in the soybean meal, and up around 20 points in the soybean oil. Those numbers that came on out is representative of the slow start of plantings that we had this past spring. And with the adjusted numbers from August, the trade is now talking about in the neighborhood of around 3 million less planted acres for corn versus the current USDA projection, in the neighborhood of around 2 million less wheat acres, and in the neighborhood of around 1 million less bean acres. Everything else being equal, that being yield and demand, what the USDA is currently forecasting, one can maybe make the claim that instead of a 1.8 carryout for the corn, we now have a 1.4 carryout. Instead of the 150 for beans, we're closer to 100 million bushels, and we can maybe be in the neighborhood of around 100 million bushels less in the wheat, in the neighborhood of around 470 million bushels. So once again, that's all conjecture as a result of everything else being equal, because we still are having a little bit problems of demand with the corn. We still don't know what our yields is going to be for the beans and or the corn, and once again, we are still a little bit high price versus the rest of the world for wheat and corn, which if we were to go and get on a rally, we would perhaps start to lose our export business again and kind of limiting the upside gains. So once again, those are the variables looking forward. I guess people will be maybe talking about the potential of the yield, at least for corn and beans, being a little bit smaller than what the USDA is currently forecasting. We did get our crop ratings coming on out yesterday. The corn ratings were down 1% versus a week ago. The bean crop ratings were down 2%. The important thing, however, maybe for the beans is that it seems like we're still around 50% or less yellowing in the beans. So these recent rains may have helped the bean pod weight to a degree as we work our way forward. And for the corn, talking about the ratings going down, at least the early yield talk that we continue to get is quite phenomenal. So that can offset the rating numbers going on down. So a lot of variables that came out this morning with the FSA numbers. Like I say, on paper, they're a little bit supportive with the prevent acres going up versus August. But obviously, we still have a harvest in front of us, and it'll get back into what we've always been kind of harping on. Basis levels crashing. Is that a reflection of the fact that it's harvest time psychologically, or are we getting to see the farmer be an aggressive seller of grains at this point in time? It seems like the basis level weakness is more psychological, and after the harvest has come and gone, the farmer sell rate wasn't really there. Basis levels will recover and thus along provide the support for the futures. So anyway, these are my opinions, not that of ADM or ADMIS. Thank you.